Hi guys, how are you? Vladimir Ribakov here from Traders Academy Club, and this is a weekly forecast for the week 1924 of April 2020. So first of all, I hope you are well and safe, and I hope you are taking all the precaution steps required, and you keep yourself and yours well and safe. As we are aware, in some parts of the world they start to release the economy slowly, bring back people to work, keeping and of course respecting some strict rules of social distancing. So please stay safe, take care of yourself, and I hope everything would be back to normal and good for all of us as soon as possible. If you are new to the channel, so first of all, welcome to the community. I would like to invite you to subscribe to the channel. Just follow the subscribe button below the video. And as well, I would like to invite you to join our free Telegram channel, where we upload content on daily basis for you, and to join the live trading rooms, where we are going through live market analysis day after day, backed up fully with a trading report, which I will show today as well. And now let's begin. As always on Monday, we publish the text version of the forecast. So what you have to do is just come to the blog, vladimirribakov.com, on Monday, or come back to the video, and you will see the direct link to this text version published on Monday. This is done by my team for you. So your help by leaving your feedback in the comment section at the bottom of the article would be very helpful and appreciated, and thank you very much in advance. The idea is very simple. You can always come back and refer to the content that we discuss in the video in a written mode, so it's always there for you, available. Also to learn how do we put our technical analysis methods together. So let's review what of the instruments worked, what failed, what validated and invalidated, and some new interesting ones that we will discover today. But before I go deeper, I would like to let you know that inside the same blog I have a new completely free ebook available for you. Well, for all those of you who are more into the beginning of their journey and consider themselves beginners and want to learn about candlesticks. So we have the Japanese candlestick patterns for beginners, very well put together, step by step, easily explained. So what you want to do is just go to the Forex Education inside my blog, go to free ebooks, okay, and you will be able to download it. Again, completely free, so it's there for your usage. Let's then sorry, that's the report. Let's then see what of the instruments provided us the nice opportunities. The first one we were following was the Euro Pound, where we were expecting to see some slide towards this supportive zone, and then we would want to see convergences start to be created, or alternatively false breakouts and higher highs. And as long as it didn't happen, the slide to the downside is expected to continue. So basically right now, as you can see, another week of this pair doing nothing but sliding lower. So these areas we marked there remain our critical zone. We did not get any reversal. And the reversal is a trend change. That could be false breakouts, for example, like this. Fake breakout below the low, it could be here again to happen, and then creation of higher highs to be supported by indicators, so we basically gain momentum, or alternatively by holding the zone, start and create higher highs, higher lows, and potentially provide continuation to the upside after retraces. That's what we will want to see on the Euro Pound. As long as it didn't happen, the slide to the downside is a fact, and that's what we have to understand. The market doesn't care how much someone wants to buy an instrument, And the market doesn't care how much someone draws beautiful lines. The market does what the market has to do. And as traders, what we have to do is hold our horses. Wait for facts, not wishes, not expectations, not rumors, facts. When the facts fit in the expectations, that's your opportunity to do any sort of trading. As long as it didn't happen, everything remains under expectations. Next one is the EURCAD. Now this one is very interesting, as we are expecting to see the break above the falling trend line, which happened, and I'll show you in a second. And afterwards, we want to see the higher highs, higher lows created. So a week before, we invalidated that and say, okay, let's see how it develops. And this week it happened. We got a breakout, and we got the higher highs, higher lows on the lower time frame, which is right here. That's a very nice sign that the market is preparing for us. And basically after that, as we follow with the bearish divergence, we expect corrective cycle, which would be 2 waves or a range for a trend continuation. So what we expect to see here is, and that's where we got it, 2 waves correction with the bullish hidden divergence. Not the best scenario, because at the end of the 2 waves, we ideally prefer to see the structure of a regular divergence, as this is a corrective cycle. But assuming a trend is ready, we are fine with these 2 waves as well. But what we are missing is the break above this falling trend line. Basically, if that's where we got our higher highs, higher lows, we want to see gaining momentum. Why? Imagine this is the first leg of the, let's change colors. This is the first leg of the 4-hour chart, okay, the pink one. And it is broken down into waves on the 1 hour. Then we got the correction. And we expect the second leg on the 4-hour. Why? Because if the trend is correct and our technical analysis is correct, we expect the momentum to be gained. If the momentum has to be gained, that means we need to see higher highs and higher lows created. If it is not created, that means the market is giving us a hint that the buyers are not here. And consider your technical analysis again. And this is where most traders do mistakes. They fall in love with the analysis, they fall in love with the idea, they fall in love with the drawn lines, and they forget to follow the facts. And the facts are critical, because what do our lines worth if the market disagree? They worth nothing. So always remember, the lines are good, and it's very important because they give you the visual expectation, right? But think about it this way. If this trend is correct and we expect to see trend continuation after this ABCD correction, that means we will want to see the momentum returning to the market. The momentum returns to the market when there are highs and lows created, series of highs and lows created to the upside. If that doesn't happen, there is no momentum, and that's the way of the market to tell you, reconsider your view. So 2 things could happen in this scenario. 1, the market opens up, breaking through this falling trend line, and we are good because we got because we got the 3 higher highs, higher lows on the first leg, ABCD correction, bullish divergence in play, breakout, and we are good. But the other thing is a possibility of 3 lower highs, lower lows, and basically a new low to be created on the 4-hour chart. So if that happens and we manage to get new low, that means the EURCAD is out of the list until the things would become clearer. And until the next momentum would be real. Basically what we currently face is a break above the trend line, which turns to be false breakout. Break and return. This is already first suspicious sign. And then we are going to the 1-hour chart to see, okay, let's see how this momentum is gained, if at all. And we figure out the answer is no. And in such case, for those who get involved in such trades, you have always 2 options. Option number 1, not recommended, is to start praying. That's what Majority of traders do. Pray to the market. Ooh, I wish it goes up. Option number 2, recognize the new fact by the market as soon as possible and adjust your position and your exposure as soon as possible. If you cut your losses, if you cut your wrong analyzed positions early, what you do as trader is improving your performance instantly. How? Remember, you cannot make more profits from situation if the market doesn't move. What you can do is have less losses. And if you are, for example, risking 1%, but you cut your trade with a loss of 0.2%, that means you just saved 0.8%. And that's compounding. And later on, when you save 3, 4, 5 or more potential losses like that, all this money you didn't lose is basically staying in your pocket and improving your performance. It's important to understand. Most traders think about it this way. The more you do, the better it is. But how can you make more if the market not moving? Or how can you make more if the market doesn't agree with analysis you do? The only way you can is to improve your performance by cutting early. And this is a real art. It's not as easy as it sounds. And trust me, psychologically, it's super hard to cut a position when you see something going in the minus, like, I have to cut. It's very hard. Accept a mistake, admit a mistake, and adjust your position. Wow, that's super hard. But that's what it takes. That's what it takes if you want to control your exposure properly and to let your winners run and cut your losses early. Okay, so I want to show this example very, very specifically because we have always two options: or fall in love with the breakout, or admit, okay, that's a false breakout. What do I do from this place after the breakout? Let's assume one took this trade. Okay, this guy or girl has an option now: or start to pray and believe for good, or get these facts. Okay, that moves a bit against me. Let's say my protection was somewhere here. That moves a bit against me. Okay, let's go to the 1 hour, see how the momentum gains, if at all. And you figure out, no, there is no momentum. That's your time to make decision. Cut early and just come back to the next opportunity if it happens, or start praying. Normally and historically, to those who pray, things don't end up too well. So that's what I want to show you here. A very important lesson when the market provides, and it's for me it's very, very valuable. I hope for you as well. Our next one on the list is Aussie versus the Kiwi. This is also one of the trades we enjoyed from during the week in Traders Academy Club. Now, I promised at the beginning to show you how it looks like from inside. So we are holding live market analysis videos on daily basis where we go through all the most interesting analyzed instruments. We have them summarized here. Okay, and basically what you have to do is to click the image, any of the images. So in this situation, we got the first leg analyzed, and then the second leg, which also was creating higher highs, higher lows. And the expectation was for bullish continuation after correction with invalidation of 61.8 wide, because if we suddenly go below, I don't want to be involved in signs where the market disagree with me and situations where the market disagree with me. So that was our plan, one of the plans during this week. And here we are. We got the instant retrace during the at the start of the week. Then we got a continuation to the upside, another pullback, another high. Which now, here is the situation where we stand. So if the analysis is correct for the long term, okay, and we are here at the end of a massive trend. that means we are good for correction in 2 waves or a range. In that case, we need to start and develop big legs. Each of these legs would have to be built by its own legs. Okay, something like that. And here we are right now. The daily trend line was broken, not retested. The daily swing high is broken, not retested. Well, now being retested. So this becomes as a critical zone for this pair. If the analysis is correct and the market would agree that we are at the beginning of an uptrend, we need to see this pullback happening right now, and we need to see a further continuation upside. On the 4-hour chart, we are facing now, for the first time of this rally, a strong divergence on the moving average and the histogram. So we could assume that this zone would provide some retraces, which later on would be used as an opportunity to watch for bullish evidences and potential buys. The way it looks and the way we want to operate in the lower time frame is that if the correction happens, that means on the 4-hour chart, we want to do what? We want to get 2 waves or range, right? If that is correct, and that's how the market would agree to move, that means the first leg of the 4-hour chart would have to be trending structure on the 1-hour correction, and then same story was the second leg. Will that happen or not? Time will tell. But that's what I want to see the price action moves like. As long as that happens, then that means the analysis is correct and we can expect corrective cycle here. And afterwards, as explained before, expectations are back to bullish. What should we avoid? 61.8 of this movement. Why? Because if the market suddenly goes through these levels, that's a suspicious sign that the bulls are not ready to take the control. So watch out for Aussie Kiwi. Very interesting opportunity. Next one was the Cad Yen, where we expected to see the bearish continuation after the 2 waves inside ABCD or ranging structure. So we wanted to see some sort of trend line on the 4-hour chart or false break on the 4-hour chart to happen before it gains the momentum. So that's where this pair pretty much stands. Not doing much, holding this range, bouncing from the bottom. If the trend is about to continue lower, then the logical analysis here stands for, and again, I kind of dislike this discount only because the candles are not clear here. Very, very small candles. Do not respect any filters rules I'm using. But the higher time frame trend is yet correct. So if it manages to hold the highs and basically to provide something like that with a breakout, then we earn basically double confirmation. This first leg in its pattern, correction and breakout, and all that would be inside the ranging analysis. If that is the case and it happens, then we can expect continuation down until this divergence would be created and completed. What will invalidate this view? If instead of moving down after the ABCD, we start to create series of higher highs, higher lows. That's immediately a warning sign for such pair. That's the Cad Yen. That's how I want to see the things developing, and it's, from my point of view, very interesting. AUDCAD, another pair we enjoyed from the rallies. This is example I showed you previous week of the analysis from live trading rooms. The live market analysis we had back then, the idea was to see after the bullish pattern was created here with 3 higher highs, 3 higher lows, correction, and bullish continuation. So this pair delivered a great move. Let's see where it stands since. Here we are. So first leg completed. Now the second leg completes with a beautiful divergence. So again, like with the Aussie Kiwi, the analysis here is much for the longer term. We assume this is the first leg. We assume this is the second leg. The expectations for the third leg. Therefore, the view remains bullish here as well. Buy retraces. And invalidation plan would remain 61.8 of this rally. Why? Because if we slide below that, close and hold below this area, this is a suspicious sign. Something not good happens with the bull, the expected bulls. So one straight move below 61.8 would invalidate such view. Until then, it remains bullish. Aussie dollar is pretty much the same, so I'm not going to duplicate myself. It's basically following the same idea. And there is one that I want to show from this week, which from my point of view is interesting. And that's the euro versus the Kiwi. So here is the plan we had. We wanted to see the creation of 3 higher highs, higher lows, after we got the convergence on the 1 hour chart, and then retraces and bullish continuation. So we got that. Let's quickly have a look here. Here we are, completed the 3 higher highs, higher lows as well, got the corrections, got the continuation, and then look what happens. And as always, I say, once you spot yourself signs against, that's a good place to step back and enjoy your profits if you were involved. And let the market do the corrections. Corrections happen normally in ABCD structure, which we cannot spot here as there is no divergence. Okay, as you can see, between these two lows, that's crossing, impossible. Moreover, it starts to look suspicious with 3 lower highs, 3 lower lows. Now look at the facts. First leg suggested that possibly we are heading here for some big corrections to the upside. But then the market delivers us a counter read, right? So we got the first rally, then divergence. If you are involved, good place to apply some management. Then we are waiting for corrections, right? After bearish divergence, we expect corrections. Corrections are normally ABCD or range. And here is our thing, patience. Does the ABCD happen? Yes. At that point, it was a bullish hidden divergence. Did a break above the ABCD happen? No. Do we have any higher highs, higher lows forming since? No. Let's see how the market develops, and instead it creates another low. And that puts a big question mark under this situation, and that's how it saves you. By following the facts, that's how it saves you from getting involved in wrong instruments. Okay? So follow the facts. This is an example how important it is. Okay? Follow the facts. Now I would like quickly to ask your support if you find the available content in the video and in the analysis I have for you. Please show your support back, hit the like button, drop some feedback below on the video, and your help is much appreciated. As you know, this video is completely free for you and for the community. Feel free to share with anyone who you believe could benefit from watching it. And thank you very much in advance. And now let's continue. So just again wanted to show you an example how important it is to pay attention to facts. And that's the advantage of the live market analysis on daily basis. Going one by one, day after day, checking how the market behaves, following all the available instruments, and when the market provides, be there. Next one we had on the list, on the watch list, is the coffee, which we were looking for a bullish continuation. Let's scroll down to the 4-hour chart. So one more low for the bullish view was one of the scenarios we discussed. Let's see where coffee stands for us. And here we are. No new low created. And also we don't yet have any higher highs, higher lows. So the analysis did not change. It all comes from the higher time frame expectation, and that's why we must follow up for the ABCD trend line. Break below would invalidate the view. Okay, before that, again, nothing happened in the market, so the analysis doesn't change. We don't have any new facts, not with us, not against us, so all remains the same. And the S&P, we want to see the break below the rising trend line, and mainly we wanted to gain the momentum as lower highs, lower lows. S&P, let's quickly take a look where we stand with that. Here. So we are on good levels, and the trend line is yet holding. We do not have lower highs, lower lows through the trend line. We do have the divergence, yes, but we don't have the breakouts. Patience is critical, and it is yet critical here. So my analysis remains the same, and waiting for validation. And that's pretty much it. What is planned for this week? And that's the things we will be covering in the Traders Academy Club. So I would like to take this opportunity once again to invite you to join us and enjoy the daily live market analysis videos, and the trading reports will be available for you. And to join, just follow the link below, the video in the description or in the pinned comment, in the comment section. What's in the list for this week? We have the majors. We have the pound dollar, pound franc, and as you saw from this report, big list here. We have the Aussies that we are going to trade with. The CAD pairs, dollar CAD is super interesting. And we have the silver that is going back on the list, and a lot of other great instruments as well, of course. So that's pretty much it. And I would like to take this opportunity and to thank you for your time watching this video. Once again, my best wishes to you and yours. Stay safe, be well, and I'll see you in the live market analysis videos this week, and of course in our Traders Academy Club chat. And see you next weekend with another weekly forecast. Take care, stay safe, and thank you for your time.